Okay, folks, we are 27th of April, Thursday, 2023. So a couple of big items on the docket coming up here in 30 minutes. Continuing jobless out of the US quarter on quarter GDP, initial jobless claims, and then PCE prices. So also going to get pending home sales in the mix there as well, but that's going to come at 3 o'clock. So the big one on the docket here for me, yeah, initial jobless claims is tier one data and GDP to come as well. But we're going to step aside from initial jobless claims and we're going to look at GDP quarter on quarter here to come. Now, interestingly enough, the last time out we got a reading of 2.6, which was a decrease from the prior, which is around 3%. So we are teed up here for the technical recession indicator to come in. Now, consensus here is 2%. All right.
On VWAP.
So if we come in line, that is your second quarter in a row of declining GDP. Now, we were here last year. We had, when was that? Actually, it was, it was about, I think we had, what was it? We had April, May, June, July, August were all really bad negative GDP prints there. But, coming out of COVID, I suppose. But, and the market really shrugged off that the last time. So, what am I trying to say? Well, I'm trying to say that, the market will probably have an initial shock here if we come in line at 2%. Obviously, if it comes in line with prior 2.6 or above, then great, and I think these markets are really going to rally big time from where we've been on these lows. Looking at the DAX, to put in a sort of almost a double top low in the week, and I think we could easily print up to about above 16,000 today on the DAX up here. But with the US, let's get over and have a look. The S&P selling yesterday, down to test on the 4080s. We were looking at this level now. It got absolutely walloped last night. And a lot of that downside pressure, I think, had something to do with the pressure we saw on oil. So in the kind of closing stages here, we kind of, we at this point, when we breached the support area and the P-val on SPOs and came down, oil was still a little bit gingerly approaching the gap low area again. And then the continued selling, imbalance down selling on equities just created this massive selling auction on oil. And we haven't really recovered, as just saying there. Oil is still a bit punch drunk, to be honest here. So equities, what can we do? Look, I'm loving this 4080s. I think the buyers are going to have a bit of this. You got to watch out for the 4118s, which was a jump point for buyers and a bit of a line in the sand there. So I think, if we get good GDP readings here above the consensus of 2, in line or above prior at 2.6 would be fantastic for buyers just to love this. And Microsoft was having an absolute stormer of a day yesterday, but that was really on the back of good earnings. Then the failed Activision bid scuttled by the UK regulator yesterday. Well, didn't do any good for Activision, down 11%. But look, I think by and large we have good tech earnings come through. The only kind of thorn in the side is the banking sector in the US. So First Republic Bank, obviously being that canary in the coal mine, down, I think it's down 98% on the year, maybe 93% on the year. Don't mention that name too much around our trading room, though. There have been some fingers burnt, I think, on banks in general, and me included, I think. Just a tiny little bit, trying to buy a dip. Yeah, there's First Republic on the Bloomberg now, trading $5.77, down 95.33 percentage points on the year. Wow. All right. So it's a bit of bloodletting, really, for probably a bit more upside here on equities. Now, looking out for resistance points, well, I would be looking out for a little bit there around 41, 42. So that would be a kind of a push up into this area. and then quieten down. So really, you want to be on that long to get there. You don't want to try and fade that up there. So what else can we look at in these markets? I mean, for oil, before we kind of say goodbye to oil in a lot of different ways, um, I generally like this area of 74.49s for potential support, and maybe we can recoup some of yesterday's losses. But the spreads and everything just getting blown out to hell yesterday on that selling. So I'm going to have to reorganize a plan of attack for my spread long, and probably going to be trading on the 2024 contracts actually, rather than 24 and 2025 contracts. I think any which way, what's the trade? I think, should we get back to 75.28, I think it is around here. I'd be interested to see if the buyers could take that on. I don't think they could. I think we get up here, you're definitely going to see some form of a pullback from here. And I think because we are holding a largely imbalanced down here on this market, I think just a bid to here, sellers are going to be taking that as too expensive, and then they're going to sell it down to 73.89s, and then who knows. I think at that point the really interesting buy for me is at 72.57s, right? 72.57s, and that is pretty much this kind of almost the low there from February this year, and it was, of course, down as the high of 2021, right? And a bit of a breakout area there thereafter. But you know, I like that area. It's just sharpen up on that level. Sorry, 72.67 puts it in line with the low of February this year. So that I think, you know, it was a jump point for the market in March 29th. And I think it could serve as a jump point again. But if we give it up there, structurally, I don't believe in the longs in oil at all. No matter, you know, you can talk about Chinese demand. I think we're down here because Chinese demand is generally just not coming back. And also, I think, you know, Russian production isn't as bad as they keep trying to tell you it is, and the Russians, you know, the data just keeps coming out that now things are actually fine. So I think there's a bit of that going on. So, you know, Joe Biden is definitely loving this. I tell you that for nothing. He is loving this. I wouldn't be surprised if I wouldn't be surprised at all if he said the BlackRock, listen, you just go into that market and just slam the shit out of it. You know, I totally wouldn't be surprised. Any which way, you know, we're down here on oil. All right, that's it on oil. Dow coming in, yeah, on the lows there yesterday, coming into some really good swing points, I think, for some traders. We'll just take a lot of that off there. And you know, that's the demand area that we had actually tagged that before. We'll put the text on again. I just taken it off because we kind of departed that area to the upside. But, you know, seeing coming in late there last night, and then just Asia Pac just melt up really from the APAC trade. So yeah, I mean, I think we can get sort of new highs on the month from here on the Dow, to be honest. I'd even be a buyer on the pullback, 33,385s. You see in the longs from the P-Val at 8 a.m. there, tally ho to the upside. Target is 33,670s on that trade, and then 694s. You know, and you probably get a pullback onto this area before then going again. So, yeah, bullish all the way here on equities. What else? Dollar. Yeah, look. So, I mean, Jason Shapiro was on there talking about, you know, the de-dollarization seems to be the most popular thing to send a tweet about and talk about on TV at the moment. And, you know, the market, yeah, obviously been going down, euro up. Is it time, though, that we start to push up on the dollar again? I think so. Yeah, I definitely think so. If we kind of look at the weekly bars here, you can kind of see generally support over the 100 spot 4 level on Euro USD, I think, is supported. I think if we trade there again, I think you're definitely just going to find a lot of buyers, and we'll kind of then start getting back to the upside. But trade's currently not setting up for me, and maybe a retest for cable on the top here, or on the top of this area, one spot 259s, I think it is, or sorry, 250. Oh, so yeah, 2507s. Maybe a little bit of a signal generator there, but for now, we're selling off of that one spot or 101 spot 50s on dollar, and should be good for euro to get up. It's just the pattern on the euro is definitely not presenting itself for a long at this time. So all eyes on this dollar pair or dollar FX pair at the moment. All right, and the Nasdaq, you got to be quick on these trades, guys. We had some signals coming in on Nasdaq the past couple of days here. Really, well, there's breakdown here on the daily, but yesterday, all right, if we look at the Nasdaq here, you're getting well, yeah, okay, so yeah, we were looking at shorts when we were having these tests here. Now you really want to be scalping in and out of this stuff, because there was a decent signal for a short there, and we got certain amount of relief on that, but then the market just kind of went sideways around this area to then top out around this area. We're also looking at that blew out, so you get stopped out on that. You'd have to go again for then probably what would have been the best trade of the day, short off of this area that is sort of APAC high spot there. So listen, we've kind of flushed out a bit of that, right? And I think we're heading back up to test on the trend here. So good tech earnings. Don't fight it. Don't fight it. I'd like a pullback here onto PVAH 12967's area. Give it a lash, as we say here in Ireland. Let's see. Right now, we're auctioning back up to the 4118s and 4121s on SPOOs. I trade accordingly. Longs on the 4080s, and then rebid into that trade. And don't think I'll be looking for longs above 4144s. Okay, that's it for a pre-US session. Have a good one. Talk to you later.